Welcome back to LVM Trade News. My name is Mark. As usual, we're going to be looking at the news and what's been happening in the forex market in the last week. Now, what we're seeing at the moment is tensions rising with China and the US, and this could be down to everything that's happening with the politics and President Donald Trump. And not to mention lots of concerns as well in the last week about lofty IT valuations, which may have also played a role. And meanwhile, the British pound, the GBP, it suffered its worst week in quite a long time, which is basically the reason is the no deal Brexit, which is going to be affecting the UK and the rest of Europe. With investors looking increasingly cautious, all of the eyes right now across the world are pointing at the Federal Reserve. Let's have a look and see what's been happening in the market. Without further ado, let's jump into it and let's have a little chat and look at the charts, and we'll evaluate the GBP and the JPY. British pound was crushed during the trading week as Brexit has re-entered the headlines again. That being the case, it is obvious to me that the market is continuing to get more volatile. And with the nasty looking candlestick that we'd formed for the week, it is very likely that we will continue to see a somewhat bearish pressure. However, the Japanese yen at 135 level could be the beginning of a turnaround. So be aware of the fact that a bounce could be coming. So furthermore, the sad reality is that you are trading the British pound. You are going to be at the mercy of the latest tweet, the rumor, the latest rumor, or the newest headline. Personally, I anticipate that this week is going to be an extraordinarily volatile level with an eye looking at the Japanese yen of 135. Well, I'm not really sure if this would be a complete news review if we didn't take a look and see what's been happening with arguably what a lot of people think is the best trading pair. It is, of course, the euro and the USD. So let's talk about the euro and the USD. The euro has been really choppy during the last week, ending up relatively unchanged. However, it is obvious at this point that the 1.19 level continues to offer resistance, and therefore you should be paying attention to it. I think at this point we're going to continue to struggle to get above there, let alone at the 1.20 level. If we're lucky, I'm not sure. I'm not necessarily saying that you should be overly bearish on the euro, but fading in that general vicinity has worked for some time. And I would also point out the fact that the high form this week was the 90 pips lower than the high form last week. The 1.17 level below, well, on the chart here, should be a significant support. So let's jump over to the Aussie AUD and we'll have a look and see how that's been doing against the American USD. Let's take a look and see what's been happening in those markets. The Australian dollar has gone back and forth during the course of the week, forming a neutral candlestick, much as the euro did. That being said, it has broken through several major barriers. So at this point, I think we're probably more likely to see the Aussie kill time over the next couple of sessions. The 200-week EMA sits just below, just as the 0.71 level does. I think both of these offer potential support. Even if we did see a pullback, I would be looking for some type of bounce to take advantage of, as the Aussie is benefiting from being so highly correlated to China. So we're seeing so much happening with the JPY at the moment. I think what we're going to do this week, since we're seeing a lot of volatility, a lot of things going up and down, basically the markets are all over the place. Let's take a look and see what's happening with the euro and the JPY. The euro went back and forth during the week against the Japanese yen, forming a slightly negative close. At this point, though, it is worth noting that the previous couple of candlesticks were shooting stars. And I think that this is another place where we are starting to see a little bit of euro exhaustion. I am looking to fade short-term rallies unless, of course, we manage to break above the Japanese yen 127 level, which could be a really bullish sign once again. Well, thank you once again for tuning in. My name's Mark, your fundamental and technical analyst for LVM Trade. I hope that you've enjoyed Marcela's video in Spanish. For more information, go over to our Facebook, Twitter and LinkedIn pages where you can get up-to-date news as it happens, or any information about promotions that we might be having. We have also just launched our new website, which is much more customer friendly. I hope that you'll agree. And of course, if you have any feedback about our news, please leave a comment in the comment section below in the video, and feel free to subscribe for more news on your Forex trading. Once again, thank you for joining us, and we'll see you in the next one.